About the big macro figures today. It's been a double whammy on the macros front. The factory output data has come in at 0.1% on the back of manufacturing sector declining 1.2%. On the inflation front too, there seems to be bad news. CPI has spiked 5.39%, led by food prices. Latha Venkatesh is here to decode this surprise further for us. Latha, do these numbers mean that a rate cut by RBI is now out of question come June?
Well, the inflation number can cause some bit of worry. Our poll was throwing up a number of 5.05%. So at 5.39%, you will have to be a little surprised on the upside. The previous 2 months, actually, we got pleasant surprises on the downside compared to our poll. So clearly, the good run of disinflation seems to be over. There are three culprits. Basically, it's food inflation that has jumped up to 6.32%. That's obviously much higher than the previous month number that we got of 5.3. No, the food inflation last month was 5.21. So compared to that 6.32 is a definite jump in food. And there are three culprits to it, mainly sugar. We all know that global sugar prices have gone up. That's the big culprit. Pulses, which were falling month on month up until March, showed a minor uptick in April. So pulses was another one that contributed to food inflation. And fruit, which is the usual culprit in the month of April, also saw a fairly important uptick. And together that pushed the food inflation higher. Even in the services inflation, whether you look at health, education or household services, all of them are up about 0.1, 0.2% even month on month. So year on year, the services inflation or the core inflation would be higher, probably up to 4.9% compared to the 4.7 that we clocked in March. And RBI looks at that very closely because services is the only domestic inflation. You can't import services like education and health. So that is the inherent inflation. And if that is showing an uptick, that would normally be discomfort for RBI. The economists whom we polled, out of the 4 of them who spoke to us, 3 of them don't expect a rate cut from the Reserve Bank in June. The industrial output numbers were definitely a huge disappointment. The expectations were 2.4%. They came in at 0.1. So basically flat, largely led on by manufacturing, which is 80% of the IIP basket. That came in, again, flat. That number was minus 1.2% against expectations of 2% growth. Electricity was the sterling performer, coming in, growing by 11%. The disappointments in manufacturing within the subgroup were capital goods, contraction of minus 15%, and consumer non-durables, which contracted by 4.4%. The good performance came in from consumer durables. That's been doing very well, and that grew by 8.7%. So that's a strong performance, but overall industrial output, nothing much to write home about. Severe disappointment.
All right, Latha, we'll leave it at that. Thanks for joining in with that. But